We saw that came through last week from the Mines Minister. It's talking about missing the 2010 target of approximately 750,000 metric tons. But when you actually read the central bank data, they already produced 745,000 metric tons in the 11 months to November. And given that they're producing around about 60,000 odd metric tons per month, it means that they should be close to 800,000 metric tons for the year. So I get the sense that we have a case here of either data that doesn't compare, or headlines, or the minister that hasn't seen the most recent data or something. But I actually think that the outlook looks pretty healthy. You know, in year-on-year terms, we're up 18% in volume of production. That compares to last year, up 14%, the year before, up 17%. So it is still a very, very healthy story.
Of course, we've got this country also planning on ramping up production. That's the big theme this year, especially with China in focus and importing a lot of its raw commodities from Africa. So demand and prices providing the incentive for many of these mining companies to raise their output levels moving forward.
Absolutely. I mean, and copper price has done very well. I mean, it's been a bit volatile in the last week or so, but copper price is generally at very high levels. Huge incentives for the mining industry to continue its expansion drive in Zambia, where there's lots of potential. You know, we're seeing ancillary investments taking place in businesses around. I mean, we've got the recent announcement of a new copper cable company which will open up and will start producing cables in Zambia, as opposed to just simply exporting the raw copper. So overall, the copper and the mining related story in Zambia stays very, very strong. You know, I mean, just to give you an idea, we had quarterly trade account surpluses last year of around about 2.4 trillion kwacha each quarter, and that compared to 2.4 trillion kwacha surplus in the entire year of 2009. You know, so we're really talking about something like a multiple of 3 times, you know, or 4 times, which is likely to be the trade account surplus in 2010 compared to 2009.
And all of that, that entire scenario providing much incentive for foreign direct investment as well. I mean, we had China's 2010 investment in Zambia topping $1 billion, and expectations this year are for direct investment to top $1 billion yet again this year. Yeah,
I mean, there's a lot of reasons to be investing in Zambia, and it's not just simply mining. You know, whether you're talking about the agriculture, because we know it's a relatively water-rich country, relatively undeveloped. We're talking about they're now exploring for oil and gas reserves. That's a process which still has to go a long way, but you know, it's at its infancy. There's huge potential in the country for it to expand meaningfully beyond what it's got at the moment.
Let's move over to the West Coast. Nigeria entering the most important 3 months of its recent political history this week, beginning with elections which could chart the path, you know, for further reform or plunge the most volatile regions back into violence. What's your overall view of the political scenario playing out in Nigeria right now?
Well, you know, elections in Nigeria historically are associated with violence and you know, irregularities. I mean, we saw how many of the state elections that took place in the previous election being overturned by courts and needing to be rerun. You know, there was a whole bunch of anecdotal stories of violence that was associated with election campaigns. So it's unfortunate, but it is, you know, it seems to be the nature of politics to some extent in Nigeria, and hopefully, you know, as the democracy develops over the coming decades, you know, that type of negative news will become less, or negative incidents will become less and less as we go forward. But for now, you know, it's something which is, you know, pretty much par for the course, and I don't read too much into, you know, all the noise that you get around the election. The process so far seems to be running, you know, after having been through a pretty troubled legislative process to get to where they are now. You know, they've now got, you know, pretty clear deadlines. You know, we've got the primaries this week on the 15th of January. All parties must have completed their primaries and give the information up to the Independent Electoral Commission. So by the end of this week, we'll have a pretty good idea of, you know, we'll know exactly who all the candidates are for the election. In fact, I think on Thursday, the PDP will choose its leader for
exactly.
And that's really between Jonathan Goodluck, or Goodluck Jonathan, and Atiku Abubakar. You know, between those two, and it looks as though Jonathan is likely need to, to win that.
Aside from impact on sentiment at this stage, Leon, I mean, let's take a look at the impact of these these elections on the economy itself and the cost of the elections, because we've spoken about the depletion of the country's windfall oil savings, which have dropped from $20 billion in 2007 to less than $1 billion now, and foreign reserves are down a quarter on a year despite rising oil prices and output as well. Just how much of a concern is that, the status of things on that front for you at this stage?
Well, the big concern in Nigeria has always been the fiscal side and fiscal management, because over the last 2-3 years, and in fact it started pretty much when President Yar'Adua came into office. That was sort of the start of the rot in the fiscal balances, and it perpetuated under President Jonathan. Where we've seen, as you alluded to, the excess crude account is largely depleted. I think anecdotally it looks as though it might have built up in recent months, but we haven't seen any recent indication of what the actual balance is. The last number we saw, it dropped down to $300 million. That's I think it was around about October last year. I suspect it might be a little bit better than that now. But we've seen a huge widening in the fiscal deficit. It's put huge pressure on borrowing in the local market. We've seen all of the rainy day savings fund money gone, and now you're sitting with a country which, I mean, when you take a snapshot of the country today, it doesn't look that bad. Debt ratios are still low. I mean, okay, it doesn't have the excess crude account anymore, but it doesn't mean that they are in a particularly bad position because of the balance sheet snapshot looks okay. It's just unfortunate when you look at the progress over the last year where they could have been, right? And so we've gone from a story which was exceptionally good to a story which is only good. So that is sort of the context which we've got to view Nigeria.
There's also, Leon, to consider the progress we've seen in terms of reform possibly being hindered, because an article I read said, there's the prospect of protracted court challenges, whoever the eventual winner of the PDP elections are in the first place. And that is, in the first place, what undermined the first years of President Umaro Yar'Adua and hampered his ability to push through reform. Do you see this as a possible major headwind for the country, where we know it's financial sector reform, oil sector reform, just the primary two that the country investors are waiting for right now?
I don't know if it would necessarily be a major headwind. I mean, for example, we just this week had a court throw out a contestation to Jonathan's candidacy for the PDP, and that's been thrown out, that he is eligible to stand, or at least it's up to the party to decide whether he's eligible to stand or not. I think when you look at Nigerian politics, I think it's the dominance of the personality which probably plays a big role. And that's why the previous president, Obasanjo, had managed to push ahead so many reforms, because he was very strong-willed. He really pushed stuff through, and he knew exactly what he wanted to achieve. And one never had the sense under President Yar'Adua that he had the same, I don't want to use the term bully, but he didn't have the same dominating personality on the political process. And unfortunately, I haven't really noticed that with President Jonathan either. That one gets the sense that you don't have that dominant leading force of in politics at the moment, and that to me is what would be a bigger hindrance to the ability of the country to reform. But you're right. I mean, the critical issues that are ahead in the short term would be the oil sector reform. I mean, that's the first one, the creation of the Sovereign Wealth Fund. Those are two very, very important, imminent bits of legislation which need to come through, and the oil sector reform, parts of it will be easier, but the most difficult part, and one of the more important parts, is the liberalising of the local petrol price, because that is a huge drain on the fiscus. We're talking about, I think, $2 billion per annum.